Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1406A, and today's date is October 20th, 2017, and the title of the episode is, The Insiders Are Getting Out of the Market. They Know What's Coming. Let's get into the economic collapse financial news. Now, as we know, and we've been reporting on this for quite a while, retail, it's continually sliding, declining, imploding on itself, and the corporate media, the U.S. government, the Fed, they've been out there saying that, this is the Amazon effect and everything's going to online. But coming out of the corporate media right now, they're starting to realize that retail is not going to get any better anytime soon. Right now, they are saying that the stress in the retail sector that has triggered a string of bankruptcy this year is unlikely to get much better in 2018 because they're starting to realize, and of course they're building up to that, the economy is getting a lot worse now. We don't know why this is happening. We had this recovery, and we can see what they're trying to do. They're saying that the sector is expected to, again, produce the most defaults at up to $7 billion, resulting in a 10% default rate. Now, during the Great Recession, the default rate was much higher than that. It was something like 17% or so. And we're approaching that area once again. And what is happening here is that it's not that everyone is going to online, because all these companies like Toys R Us, Sears, JCPenney, all the chain stores, they all have an online presence. It's nothing special to have your catalog on the web. That's really what it is. I mean, back in the day, Sears used to distribute a catalog. You used to look through it and you used to order. Today, that catalog is now on the internet. Everyone has their catalog on the internet. Amazon has their catalog on the internet, and they have a couple of stores, but they are mostly online. But they like to use Amazon because they sell pretty much everything. And what is happening here is that they're trying to explain why all of this is happening, and they're trying to come up with some type of an excuse. The real problem is that people today, they've never really recovered from the 2008 crisis. Now, there are certain individuals, and this happens in every crisis, there are certain individuals that are not affected whatsoever. They get through it, no problem. They keep their job. They don't really realize that anything's wrong. Maybe they're not getting, the cost of living raise that they really wanted, but they're able to keep their job. Other people were able to keep their job up to a certain point, and maybe last year or the year before, they got laid off and they started to realize that, hey, there are no jobs out there, or they went to find another job and the salary has dropped quite a bit, but they were still able to get a job, but they had to take a lower salary. And then there are those that got hit very, very hard. Those individuals that lost everything, lost their pension, lost their homes, couldn't find another job. If they did, it was a part-time job or a job that was paying a lot less than they were making. And they did whatever they possibly could to survive during this period of time. And a lot of people had to readjust and basically change their lives, where they said, okay, we can't own that house anymore. We can't own this type of car anymore. And they had to make tough choices. Some people had to move. Some people just left their homes. And what is happening right now is we're coming up to the point where there's another wave of this coming. And it's going to be very, very difficult on many, many individuals, especially those who were not affected the last time because they've been sitting in the same exact job. And when layoffs come in once again and this sweeps through many of these sectors, many of the industries, people are going to be shocked and surprised that, wait a minute, I was just laid off, I'm putting out my resume, I can't find jobs. Now, they're looking at all these different stores. We know that Toys R Us, they declared bankruptcy, but they're saying, and this is coming from Fitch, that PetSmart, Belk, Ann Taylor Parent, Ascena Retail Group, Tailored Brands, Inc., they are going to be having a huge amount of problems coming up very, very soon. And right now, the retail sector accounts for 30% of the defaults that have taken place in 2017 to date. And they're saying that this is going to increase as we approach 2018. Now, the only reason this is going to increase, it's not like all the sales are moving over to Amazon, because we're not seeing that at all. So The reason why this is increasing is because the economy is ripping itself apart. It's not because, oh, wait a minute, online is getting all the sales, because they would show that. They would say, hey, look, we had the retail sales in the brick and mortar business, and it was sales of, whatever it was, $100 billion. And now Amazon is now receiving $100 billion more. You're not seeing that. So this whole idea that Amazon is stealing everything is really not true, because the online business is only 10% of the total retail sales. Now, we talked about the market and how certain institutional investors, they know what is happening in the market. They know when to get out of the market. These are the insiders. And what we see, and this is coming out of Bank of America, they compiled this fund flow data, and this is coming from Michael Hartnett. And they're saying that these institutional investors, these insiders, well, they're starting to move out of their stocks. So stock holding rotation is accelerating right now, and they're seeing another $8.8 billion allocated to equities, more than all of it from retail investors, and another $5.8 billion going into bonds. So what they're saying is that there's a huge amount of insider institutional investors. They are getting out of stocks right now. And there is a really great chart that shows this, where you can see the institutional investors, they've been selling like crazy. And there's a reason why they're doing this, because they understand that the market has hit all-time new highs. It's overvalued. We see stories coming out of Yahoo Finance, coming out of MarketWatch, coming out of many of these financial type of websites, magazines, and they're all saying the same thing right now. And this is the propaganda that leads up to the market coming down, because once they start dropping these type of articles, we saw it back in 2008 where they started to mention the market coming down, because they like to be covered to say, hey, listen, we were on top of this, we're telling you exactly what is happening. And remember, the economy hasn't changed. We're still running under the Obama recovery right now, and we knew, and the Fed knew, the government knew, that this recovery was only going to last a certain period of time. And here we are right now at the end stage of it, because the Federal Reserve, there's no place for them to go. They can try to unwind. They can't really raise rates. They'll bring down the economy. If they try raising it one or two more times, it's going to be a complete disaster. Deutsche Bank already reported on that, saying, listen, if they move the rates up a little bit more, it's going to be a total disaster. We saw what happened when they raised the rates with the mortgage applications, with refinancing applications, with housing. It all fell apart. So here we are right now, and we're starting to see many different signs, a lot of indicators showing that we are already in this recession. It's getting worse, and I'm saying that we were in this recession going back to 2016. Everything is in a bubble. We're starting to see the housing bubbles. They are popping in Canada. They're deflating in Australia. We're seeing it in the UK. We're seeing it here in the United States. We're seeing homes on the market longer and longer. And I'm not saying it's happening in every single place. It doesn't happen all in one place at the same exact time. Go back to 2006, 2007. Miami, down in the Florida area, they were building like crazy. It hit first in the northeastern area. Actually, it hit first out in California. The rest of the country said, I don't understand what's going on here. I don't know why these people are leaving their homes, why building has come to a screeching halt, because we're building like crazy here. We have contracts, out the window. And then all of a sudden, 6 to 8 months later, everything came to a halt. Buildings were empty. People backed out because a lot of it was speculation. And everything started to fall apart. So if you're in that area where things are great right now, it's going to catch up to you slowly but surely. And over the period of time that we've been talking about all this, people have been writing in saying, yes, at one point I wrote into you and I said things were great in my area. And now a year later, all of a sudden things have gone the opposite way, where people are trying to sell their houses. They're scratching their head saying, I don't understand why I can't get the money for this house. Why do I have to keep lowering it? Why is it on the market for such a long period of time? And this is what happened in 2008. A lot of realtors, a lot of individuals didn't understand what was going on. They didn't understand what happened. Why did the traffic dry up? Well, that's because the whole thing was an illusion. It was fake. And of course, the corporate media, the Fed, they were out there still telling people that this is, fantastic. Housing is going to keep going up. Sales are incredible. Things are fantastic. Don't worry about it. And people are saying, well, it's maybe something I was doing. Maybe I didn't plant flowers. Maybe I need to cut the lawn. Maybe I have to fix the inside of the house. And people tried all these different things. But guess what? Nobody came, because that wasn't the problem. The problem was the economy was breaking down. This is what we're seeing right now. The economy is slowly breaking down. It's been slowly breaking down for quite a while, because it took a long time for the Fed to pump all this up, and now we're on the downside, and things are getting worse and worse. And this is why you need to be ready and prepared for what is coming, because once it hits, you're not going to have any time to do anything. You're not going to be able to run out to the store. You're not going to be able to run to the gas station. You're not going to say, oh, let me get all my supplies now. Think about all the individuals in Florida and Texas. When the hurricane was approaching, every single person ran to the gas station. There were lines like you couldn't believe. It was, 50, 60, 70 cars. And by the time you got to the pumps, the gas was completely gone. Store shelves, if you were looking for water, completely gone. The same thing's going to happen when inflation hits. The same thing's going to happen when the credit crisis hits. People are going to sit here and say, I better run to the store. And there's going to be tons of people running to the store trying to get whatever they possibly can. Now, of course, people aren't going to realize this, because the corporate media, the government is going to tell them that everything is fine. But there are going to be certain individuals that will be stocking up on this stuff. Other people will get wind of this, and it will slowly all of a sudden happen where everyone is running to the store. You don't want to be caught up on this. You want to be prepared. You want to have your water. You want to have your food. You want to have your supplies. You want to have cash on hand, because you'll be using that first. You need gold and silver to protect your wealth. You might even want to have some cryptocurrency. Just let it sit there. But you're going to need all these sides: toilet paper, medical supplies. You will need this, because I'm not saying that we're going to have a Mad Max scenario, but what's going to happen is these things are going to be hard to get. Or we're going to see inflation, and they're going to become very, very expensive. And then eventually they'll become hard to get. So you need to get ready and prepared for what is coming, because we can see there are so many indicators right now that are pointing to this entire system coming down. The insiders already know. If they already know and they're already preparing for this, you need to prepare for this. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.